Hi guys, let's start the AMA for today. We'll try to wait for other people to join, but still, if you, as you know, like if you miss the AMA, it's going to be posted the next day. So why don't I just get started anyway? So I think from now I'm probably gonna start with some like more kind of just go through the products, the some data and stuff, so that people like communities, everybody has like a clear understanding of what we're doing. So why don't I just kind of go through some of the highlights for the past week? Yeah, so what we've seen with LNT lately, it's there's been quite some trading volume on both the node deposit and and withdrawal part, which is kind of in accordance with OpenSea arbitrage. That we're still kind of doing quite some volume with the on the which essentially is a burning VATH or VREPO for that matter. So and at the same time, there are also just pure VATH to ATH trading. As you can see from the chart on the LNT for Ether, the price has actually been going down quite a bit since February. That is mostly in relation, sort of hand in hand with the decline of ATH spot price, and so which makes sense because if the token's depreciating in value, VATH, it's sort of the future value of the token. The outlook for future ATH price also gets affected, so it becomes less desirable. So we see that it goes from zero point 0.5 to 0.4%, zero point 0.4 face value. What that means at zero point 0.4, it means that it's like it's one. It's like you spend zero point 0.4 ATH token to buy one VATH token, and this one VATH token eventually becomes one ATH token. So you're getting that at 40% discount. So we actually got some questions regarding how exactly does that work lately. Really the price is market determined. This is an AMM, just like any Uniswap AMM. We just started off, if you go all the way to the beginning of the chart, August last year, I think we started off around 30% face volume. And throughout these past 8 months, the price for VATH went up to 60%, and then went as low as 20%. So it's pretty widely being traded. And right now it's at 40%. There is a inferred upper limit or ceiling for VATH price, which should be around 80%. That is because if you use the put option to redeem VATH to ATH, you're getting 80% of this value because we are charging a 20% fee for the redemption. So in that logic, the price you shouldn't be getting the VATH at more than 80% face value to the ATH token. So talking about the put option, it's really popular since we rolled out this function in February. Right now we've been kind of doing it, I think, on a daily basis with ATH token, ATH claims, because basically what the flow is the wallet gets the ATH token, actual node rewards from Ether, and then we put them into this put option pool, and people who are holding VATH, you get to claim them through the put option, which essentially you are burning your VATH for ATH received. And in that process, we charge a 20% to the treasury, and then we actually had a post last week on our revenue sort of methodology and also forecast. And you can read that in our Medium page. You can also find it in our recent post about the revenue. I think ATH alone, we're probably making like a couple $1,000 so far, which is lower than we expected because the ATH price has been only about 10% of what it was last summer. So that's a bit of a bummer, but I think at the same time, the product definitely served its purpose. There are quite some people who sold their nodes or their vesting ATH token to the market, at a much higher price than now, throughout these 8 months. So definitely, I would say the product it facilitates these trading of these future tokens, and looks like for Aether, the seller is winning so far. And again, going back to the put option, if you can see, there's a next batch is a 14,487 ATH token to be claimed in the next 17 hours. However, there's more than 12 million VATH put in the pool to claim those tokens. So what that does is that when the claim actually happens, the 12,700,000-ish VATH token are going to kind of split those 14,000 ATH token. So you just get a fraction of that. So it is quite competitive. However, if you keep doing that, you keep those VATH in the pool for put option. Gradually, you're going to redeem out of the ATH token, which is right now, as you can see, there's still 27 months, because each one VATH is backed by one future ATH received on our end. So yeah, so this is another way to kind of just realize your APY gradually, as opposed to holding it till maturity and then sell at the very last minute. So yeah, so this is a kind of a more streamlined curve for your return for VATH. Let's say you bought, X amount of VATH at 40% face value, and then you put everything in the put option. And each time you would receive like a portion of them in ATH, and then you sell on the open market. By the end of the 27 months, what you're gonna get, it's sort of like a flattened out price of the average price of ATH price to US dollar for those 27 months, as opposed to you just kind of taking everything at the future price, at the end of the 27 months. So that is different ways you can play it. At the same time, you can also provide LPs. We're always getting questions asked about what's the APY of our ATH. So basically the VATH APY, as you can see, it's 127.96%. That number, it's you buy at 40% discount, and then in 2 years you sell it at 100%, which is you're making 2.5x in 2 years, which means mathematically that's about 120% in APY effective, your rate, for the year. So that's just the inherent logic of holding this vesting token, because you bought it at a discount now, and then in the future you're gonna have a X amount of return. Yeah, and at the same time, there's also LP-ATH, which is when you provide liquidity by pairing VATH and actual ATH. In the AMM, there's a tab where you could provide liquidity. You just need to go to vesting token, and then right next to swap, there's add liquidity, remove liquidity. That's how you get LP-ATH, and then you actually earn a fee. So swap fee right now, it's only reading 1.45%, but that's for the week. This number gets updated every week. I won't explain the exact math behind it, but I think before 2026, we actually had a calculation for the last year's APY for LP is actually pretty high. I think it's over 30%. That's of course on the token. So you're making 30% more ATH token if you're LP. As you can see, it's a 55.59% in the LP ATH. That's lower than the 127 because only about half of the LP position is in VATH. ATH itself, there's no APY, it's just one. So that's how we kind of calculate it. And yeah, once you get it, I think it's pretty straightforward. And basically, I think for Aether Wallet, definitely still pretty popular. As you can see, there's constantly like nodes being deposited and then withdrawn just based off the OpenSea node price. We didn't do none of these. This is purely community. There's people who are like monitoring this price, and they try to arbitrage more or less, and I think that's great. Um, yeah, and talking about that, and then I think further along, let's talk about repo Silvernode a bit. Yeah, if you go to the repo page, another LNT vault from our partner that is on Base network. Yeah, so as you can see, the price for vRepo is actually quite like one. It's just really good. It's just we launched it at about 35%, 40%, and right now it's about almost 70% face value. So this is a good example of people are really bullish on the future price of repo token, and then they're like, why don't we just like buy the V repo at a discount, and then it's going to be repo in a short period of time, and then if you think the repo is going to go up further, that means you're getting. It's great that you can get future price at a discount. It's a no-brainer. So we're pretty happy to see that the price has been pretty consistently going up, driving up for B repo against repo. Right now, it's actually the 70% is actually pretty close to the hypothetical ceiling of 80%, which is after we charge the 20% fee on put option. So let's see, the put option I think this is bi-weekly, if I remember correctly. 4,135 to be claimed in 10 hours, with more than, it's close to 600,000 repo, vRepo in the pool requested. Again, really, really popular for people to do the put option, which is to redeem your future token today. So yeah, so again, so the 584,000 vRepo, you guys are going to effectively split the 4,000-ish repo token. If you continue to do so, eventually all of these are going to be claimed into repo. Of course, once you do that, you decide if you wanted to sell it or you wanted to just provide LPs here. LPs, swap fees are 3.41% APY, slightly higher than the Aether token, but this number gets updated every day. And again, because the discount price is higher, it's at 67% face value. So the APY for vRepo it's lower than Aether, which is the APY here is 60.53%, and the time life for maturity is 20 months. So little less than 2 years. Okay. I guess I'm not taking that much time. We can talk about LVT Vault as well. So LVT Vault are more general. Like we started off with LNT, which is very clean because everything is on chain, like it's decentralized, and whoever's holding the node, you can kind of just run the node and claim the rewards. With LVT, we kind of take a hard look at the industry. Most of these log structures are sort of sometimes it's institutionalized, sometimes with the project, with some key players. So we actually go to these key players and then ask what they want. And then overall, I think about last time, I think I read somewhere 35% of all the crypto transactions are actually OTC'd. So it's not on the exchange or on chain, it's just between different parties. So yeah, so this what we do with these logged contract, like the Filecoin mining contract, it's we're bringing what used to be an OTC deal where they buy and sell future, logged Filecoin rewards. we put that on chain so that then people can actually trade without the sort of like the hassle of either through like a third party or sign contracts or just by purely sending to EOA between EOA accounts. This is all done, of course, with DeFi. It's all smart contract. It's a code is law, and then you just kind of just believe in the product. And it's so much better than than having to do that for lots of these time. These trades are happens on a daily basis or weekly that they're settling future rewards. So what our VT market is for, let's say for a Filecoin, then it's we create this market where the future, it's kind of similar, actually kind of like the futures market, where people can just trade the certificate for future rewards every day. If you click the product, and actually I'm actually on that page right now, it's actually quite consistent. We've seen the price trading about 72 to 84% range, and this happens quite a bit. And then which is pretty normal. I think there's a pattern of how these deals are traded most of the time, especially I think on the institutional side, because VFile is going to be redeemable to file, then lots of time they're kind of buying and selling in accordance with whatever hedging strategy with their holdings. So there's definitely a pattern. So people who are trying to make some profit out of this, I think it's doable. I don't think many people are doing it. Most of these trades are probably still pretty organic. Yeah, again, I think this is a really a great product because what we did is we pulled these deals that were previously pretty hard to do, and now it's through DeFi, our platform, it actually becomes quite trustless. And again, it's 500, sometimes 300 days, sometimes 500 day locked, and it's definitely like important for people to be able to trade those rewards. And then coming up, there's also like the Story and Say product, which is a Story and Say LBT products are quite similar because they are both like essentially like locked liquid staking tokens. So liquid staking token actually by design is not locked. That's the whole point of liquid staking is that so that you have liquidity. However, nowadays I think most chains they want to incentivize some type of locking mechanism by providing higher APY to the logged holders. And that creates the same issue with the Filecoin staking, which is you have these set number of rewards that you know are going to come, but you don't know what the price is going to be in the 360 days or so. So that we create this market where people can trade them. So we set up these two walls as well. And then I would say like pretty similar trading pattern with Filecoin, but probably I think Filecoin is probably still the more traded one, just because I think it's been around for so long, and then there's lot more miners and institutions looking at it. With Story, we set it up, and then I think it's pretty good TVL. We worked with both Vario and Metapool on the product launch, but it's haven't been as heavily traded, I think. But still, like I'm pretty sure like you listed all the volumes on the Story mainnet, we're probably still up there. Yeah, so just because it's a newer chain. Say product as well, I think is more. I think we worked with Splashing SEI, the Splashing Say, the LST protocol there, and trading at a pretty tight range, very similar sort of methodology. Going forward for this year, we actually have quite some like exciting news sort of planned. So number one is sort of to grow the existing products, like more nodes, more vesting tokens. So other than like more layer ones, more like project tokens, we also wanted to tap into the private market where investors trade their SAFT contracts, and then they literally oftentimes they just like OTC their SAFT contracts with some market makers, with some other partners, and then for Project Foundation do that as well. The price is actually quite tend to vary quite a bit. So we want to create a mechanism where these sellers they can not selling their whole shaft, but they do it sort of like a like fungible way where they mint VTs, and then they can decide what the VT price is for people to start buying in the pool. And then if more people buy, then the price goes up, vice versa. And then they still decide how much they want to sell or not sell. So it's a quite flexible. There's no, I mean, from their perspective, it's like you have another way to sell your early investments. So it's kind of a no-brainer. The only thing we need to ensure is that once the investors sell the VTs to, let's say, to a user, to a retail user, then the retail user holding the VT eventually needs to get those actual native token from the project foundation. So, so that's the tricky part because there's uh, more than likely it's not going to be entirely on-chain operation. It's going to be sort of legally binding, or just need to make that super public so that the foundation reputation is at stake, and there's people who can monitor to enforce that VT gets transferred to T by the end, or through third parties like token management platform. I know, BitGo, Coinbase, Magna, they all kind of have these like automatic functionalities. But those are again not trustless. If you want to do everything on chain, it's still going to be some. I guess it may not even be meaningful to do everything through like smart contracts. But again, so that would be the key from the product sort of market fit perspective. I think it's really a no-brainer to make these OTC deals more transparent. Yeah, so that, and then also want to tap into RWAs. There's case studies that we're looking into where there are things like investment stakes in VC funds, like for example, like crypto VCs. They have LPs who people who like invest in these VC funds. So the life cycles tend to be like 3 to 5 years. So lots of people they put their money in. It's initially as a venture investment, but 3 4 years in it, there's still like no sort of time for exit. We want to create a way where they could do some DeFi stuff with their crypto VC stakes. That's actually pretty interesting because from what we know, that lots of GPs they're getting requests from the LPs to to like either withdraw or liquidity exits and or sell the stakes. Those are not very easy to facilitate. But what's like the nice thing about this VC investment, it's this most time it's in tokens. So in a way, it translates to what we're doing, which is a future token allocations that's currently logged. So these LPs essentially like they bought into these early tokens, which will be vested at a certain time. And then we can actually create a market for that and to price that in. So people who invested, they know how much market value it is right now, and then perhaps they could do things like lending, borrowing on top of their VC stakes, or transfer those stakes to secondary market buyers. And then for GPs, once you do this, that means your performance becomes transparent and people can see how your fund is performing for your LPs, which is like if you're a good performing GP, that's it's great marketing, and it's also no brainer because it solves the problem for the LPs. So that's kind of really tap into the real world assets category because it's TradFi investments that we're putting on chain. So I think right now is a great time to build overall. There's kind of less noise with the market. Just like from these months, I think there's a lot less tokens being launched on CEXs. There's also not that much kind of hot new narrative other than maybe AI. So for DeFi, which is I think DeFi becomes very much like a utilitarian, actual utility, solving real problems for like for real world use cases now. So it's a good time to kind of build, and then I think we're pretty well positioned for that. Um, and Yeah, just wanna kind of share that with the public and the community. Other than that, I think that's pretty much everything for me this week. Just some of the things that I planned. There's not that many questions. We did get some outreach from other chains and just like some general questions. I think uh, yes, I think those are all good. We're trying to be more active on all channels. But we have a pretty well documented white paper or Gitbook page that you can check out, and then the Medium page as well as the YouTube channels. We have all the sort of information there, and then we're always welcome discussions. Um, so yeah, that's pretty much all for today. And we're trying to be more plan out more stuff to like more meaningful stuff to talk about each time, especially the major updates every week. Um, and Good. Hope you guys are doing great with all the madness these past 15 days in different regions in the world. Yeah, I'm going to head out and hope you guys have a good rest of the day, of the week. Bye bye.